Hello and welcome to Edison TV. I'm Miłosz Papst, an analyst in the financial system here at Edison, and today I'm joined by Murat Koshenov, who is Deputy CEO and CFO of Halyk Bank. Mr. Koshenov, thanks for joining us today.
Thank you for having me today.
Can we start by giving us some background to Halyk Bank and its market position in the local banking sector in Kazakhstan?
Halyk Bank has a long history. Last year, we actually turned 100 years. So we have roots from Soviet Union savings bank system. Halyk Bank was privatized more than 20 years ago. And in 2006, we went public in London and we have listing of our GDRs. The share of GDRs currently is around 30% in London. We also have listing in Kazakhstan on Kazakh Stock Exchange and Astana International exchanges. And we estimate that we have roughly 100,000 retail investors in Kazakhstan. In terms of the group, we are diversified financial services group, and Halyk Bank, which is the leading universal commercial bank in Kazakhstan, is at the core of our group. We also have two banking subsidiaries, one in Uzbekistan and one in Georgia. We have banking joint venture in Kazakhstan together with Chinese CITIC Bank in Kazakhstan, where we are holding 40% in the joint venture. We have two insurance subsidiaries in Kazakhstan, one in general insurance and one in life insurance, both being the leaders on their respective markets. We have a brokerage business through our leading investment banking arm in Kazakhstan called Halyk Finance. And we have some other subsidiaries like Halyk Financial Services, which is dealing mostly in the marketplace and e-com payments. And we have a quickly developing cloud business through our Kaz-Teleport subsidiary. As a Halyk Bank itself, we have a strong market position in Kazakhstan. In terms of the assets and deposits, we have roughly 30% of the market share. In terms of the capital, it's even more, around 35%. And we're particularly strong in the corporate banking, SME, and retail. So it's purely classical universal banking model.
Thank you. That's a very useful introduction. Now, you've mentioned the strong market position you already have. So maybe in this context, can you discuss the major growth drivers you see for the business, such as market share gains, cross and upsell across your digital ecosystem or regional expansion? That would be helpful.
Yeah, definitely. While I mentioned that we have a, let's say, classical banking model, I was looking mostly from the client segment perspective. But it's if you look from the product basis, if you look from the channels, how we're reaching the clients, it's a very modern, digitally based business. And that is becoming the core and center of our growth. We have, in terms of banking proposition, two core mobile systems. One is dedicated for retail. We call it Halyk Super App. At this point of time, we have 7.8 million monthly active users there. And the growth was around 11% year-over-year basis. And that is truly super app because we have a daily banking services, we have all the financial services available to our clients. But not only, we also have quickly developing lifestyle services like providing marketplaces, buying tickets for travel, buying tickets for different entertainment services. We have availability of digital investment solutions. Clients on our platform can buy digital insurances. So it's really super app. So that is becoming the core for our retail solutions. And in order to increase engagement, we are investing a lot in developing our ecosystem, particularly lifestyle services. In terms of SME business, we also engaging in strong digital story. We started that obviously somewhat later than digitalization of retail, but that is also becoming a new growth story for Halyk Bank. Like, for example, in the third quarter of this year, 94% of SME loans by count was issued digitally. So instead of going to our outlets. People are going, the small businesses, particular individual entrepreneurs, are able to get credits through our mobile application, which is dedicated for SME clients. And if, for example, the total SME loan portfolio of Halyk Bank increased by 17% year-over-year basis, the digital portion of SME loans increased by close to 7% year-over-year basis. So this is the clear example that digital story enables us to quickly leverage and quickly increase the certain portions of our business. And also we looking in terms of the digital, how we can apply that not only for our core businesses like lending or onboarding the clients or providing other financial services. Again, we trying to bring together not only the financial but also non-financial services in one place. We also look how we can leverage our digitalization in our subsidiaries, insurance, brokerage. And in terms of the focus, obviously, Uzbekistan, where we as Halyk Bank already present for 5 years, is also becoming a very important story going forward.
Thank you. That's very helpful. And now maybe focusing for a moment on the macroeconomic environment. It's locally in Kazakhstan, it's currently characterized by high interest rates and high inflation. So maybe you can help us understand how you navigate this environment.
Obviously, the macroeconomic environment is, on one hand, if you look at the figures in terms of GDP growth, remains quite good. The economy is growing. Last year grew by more than 5%. This year it is expected to grow by more than 3.5%. It is expected that it will continue mid-single, the 3 to 4% growth in coming 2 to 3 years time. Also, based on the increased projection of oil production and export, there is a strong country reserves. The credit ratings of the sovereign is very strong, but obviously inflation is somewhat high. And while the inflation was dropping from the peak, which was reached early next year at the level of 20%, we are now having single-digit inflation. But I think it takes a lot of efforts now from the National Bank and probably coordination with the governments in order to see how inflation can be moderated further. Until then, the National Bank is taking approach to keep real rates at high level. And currently, indeed, the base rate, which is the key central bank rate of Kazakhstan, is standing at the level of 15.25. Actually, it was increased even by 100 basis points last week as a response for increased volatility on the FX market. From that perspective, obviously, we as the bank are trying to see that we are properly managing our balance sheets from the asset liability perspective, from the net interest margin perspective. We also having only 20% of our loan book denominated in US dollars. So that is also limiting any FX risk going forward. Altogether, as a Halyk, we managed to go through different situations on the economy. We are facing during the last 15 years probably all the different turmoils, starting from the global financial crisis and then situation started from 2014 to 2015 when the conflict between Russia and Ukraine started. We went through COVID situation 2022. So basically, we had different cases, and Halyk Bank actually showed that we have a very strong franchise, we have very strong client base, we have a very diversified lines of business, very strong capitalization and liquidity, which help us to go through different situations on the market.
Thank you. You touched upon your strong balance sheet position, and I think it's fair to say that when we look at your operating ratios, they are best in class. So in the context of your strong market position, the growth initiatives you've just outlined, and the macro landscape, do you expect these ratios to be maintained going forward?
Yeah, indeed, as you rightly mentioned, we as Halyk Bank have a very strong cost-to-income ratio. Actually, for 3 quarters this year, we have a cost-to-income below 18%, which is, I think, low by any standard. That is primarily due to strong increase the operating income and all the digitalization of our processes, which we engaged and help us to make our productivity very strong. At the same time, we want to be very careful in terms of continue to invest into the growth. And that's why we think that cost-to-income ratio might not necessarily stay at this level or go in further. We rather expect that it might go up to probably 20%, which is remaining our guidance. And this is exactly from a perspective that we as the bank need to continue to invest in digitalization, in managing our data. The new actually topic is artificial intelligence, and we are looking at what AI, GenAI particular applications can be implemented in our different parts of the business. But even 20%, I think, is still quite strong number, in my opinion.
Yes, absolutely. Thank you. And finally, I think it's worth touching upon your dividend policy, right? Because you've paid quite attractive dividend in the past. So maybe you can shed some light on the current dividend policy and the outlook.
Yeah, Halyk Bank has a very strong capital position. And even if we regularly paying dividends, as of now, our capitalization level is standing at 19%, which is quite strong. We indeed have a dividend policy, which basically said that we are prepared to pay not less than 50% of the net profit. We also, starting from this year, put the possibility to make payment at least twice. And actually, we make a first payment in our usual timing in the first half of this year. And in the coming week, we will be having general shareholders meeting, which will be deciding on the second payment. And the proposed payment is around 50% of the net profit of last year. If that will be approved, the total dividend payments for 2023, which is paid during 2024, would constitute 55% of the net profit of last year. And on top of that, I can probably add that this year we launched the buyback program. And that is probably not a big amount. It's in the area of 1% of our shares. But this is the program. And once it will be completed, we might consider relaunching that or continuing that program going forward. But that decision would be taken after we complete the current program.
Murat Koshenov, Deputy CEO and CFO of Halyk Bank. Thank you very much for your time.
Thank you very much.